Today, when the price of Bitcoin doesn't move much, I would like to talk about some fundamental things about Bitcoin and its features, those which are pretty transparent and everybody knows about them, but I still want to underline those because I believe that it is very undervalued and still there's not enough understanding of those things in general. And as soon as people will get it, then the whole image of cryptocurrency, Bitcoin in particular, will be different. So I will start with the two stories, recent news actually, February 8th this year. First one is about that the Wells Fargo's banks, the fourth largest United States bank by assets, reports an outage on mobile app and online banking. It was said that they had some smoke in their server rooms or something, and because of that their operation was stopped, and for a few hours, even if not more, people cannot use their money. And it's actually, again, it's fourth largest bank. These things can happen when you trust the entity which is centralized, and actually it shouldn't happen in such huge bank, but apparently it could, and it's actually not the first thing when it happened with Wells Fargo. Another news is that about the man who was carrying $50,000 in his backpack from the airport, and basically it was kept by police, and they are saying that it smells like marijuana or something, and we will take your money from you. And his lawyer was saying no, he is just a businessman, and there's no illegal activity associated with this money. But it's not that easy to argue with the official authorities in that case, and it seemed like the money was taken and probably wasn't returned yet. So with cash you may have another problems like people just could take it from you, even on the sort of official and legitimate reasons. So, and when we look at that, we consider that actually if you have the decentralized network, which we have for Bitcoin, and now it has like 10,000 nodes, more than 10,000 nodes all over the world, you can think that nobody can actually take that money from you as soon as those nodes are operating. So you see now it's like 4,000, usually it's like 8,000 nodes. And the point is, even if like one continent will be completely cut from the internet or something, then you still will be able to reach your funds. And the main thing is nobody can take them from you. It's yours as soon as you hold your keys. It's a very important feature which sort of obvious, but it's still underestimated in my opinion, because you see the actually I think it's just loading. It's now updating the number of nodes online, so it's probably bigger than now. So the point is, the way this safety of this system is supported by, I think, the biggest distributed network, a computing network in the world. And of course, like, we can think of like 51% attack case and everything, but it's actually really expensive, and it's could be managed by the proper governance of Bitcoin blockchain community and so on. But the point is, still, if you have those funds on the blockchain, it's yours and nobody can take it. This is the major point. So continue with that. People are thinking about their investment, like where can we store our money, and most of people are like just having it in cash, in bank or something. But you see, with fiat money we have a lot of inflation, especially recently, and it's clear because of the fact of that governments are just printing money as much as they need. And if you look at the supply of dollar for the recent century, you would see that initially it was like $10 billion, and then like 50 and something, and then recently in the recent decades already $1,000 billion, $10,000 billion. It grew like 10 times, more than 10 times in a few like 30 years. So if you plot this, actually, you will see that it looks like very similar to the chart of a bubble. So whether it will be burst, I guess it will, just a matter of time, like a Bitcoin, right? Or even actually worse, because the amount here is much bigger. So when people are thinking what to invest to, how can we save our wealth, then they start to consider like, okay, we can invest in stocks, in bonds and everything, but all of them have the certain inflation, even gold, because you see, gold worked as pretty nice investment tool for hundreds of years, because it was hard to get more gold. So the price of the gold wouldn't be diluted because the increase of the amount of the gold. But it actually grows in terms of the production and mining. So you see this yellowish orange plot, which is showing the production of the gold. It actually rises even with a faster speed recently because of the tech boom, because of the new mining areas were found and so on. But still, as soon as you don't have the capped supply, the limited supply of the asset, it will rise in the volume, and it will make its value lower for the certain amount of this asset. So if you will also include the inflation in the estimation of the price of gold, you will see that it also works the same way as all the other assets. You have the highs, you have the lows, and if you will buy here and expect it to be your pension fund, then when you will be retired, you will find that you actually have like, well, 40%, the 20% of your initial investment. That's amazing, and then you will die here, and then your investment will be rise again. So other people will get money on that. So gold doesn't really work at least as a store of value. Not mentioning the use it as money, because money is one of the very interesting topics in general. There is a certain evolution of money in history, when we had remember those shells which are used as money, then we have the golden or just other precious metals coins, and then finally some paper money, and then they transfer to electronic versions, and they all have certain properties, and in order money to be sort of ideal, perfect money, they should be, of course, uniform. So all versions of the same denominations must have the same purchasing power. It should be portable, durable, fungible, divisible, acceptable, and you should have limited supply, which you have with gold, and which you don't have with fiat. And that is why it's the main reason of the inflation. So, and all of those features are becoming better and better as soon as you have the money forms evolution going forward. The acceptability is only one property of money which is sort of non-fundamental, because people decide between themselves, what shall we use as money, and as soon as good enough, as soon as all people are agree to accept it, then it becomes acceptable, it becomes money. All the rest is more like fundamental things. So what is the new step of the evolution of money? You can, returning back to Bitcoin, if you will think of any of those properties, Bitcoin has it better than the fiat, than any existing or existed version of money in the world. The only thing which is you can literally go through all of them and you'll realize that it is so. The only thing which is not followed yet, it is acceptability. But again, it is very speculative thing. And even now you can look at the Lightning Network, so you can actually pay with Bitcoin through the Lightning Network, more than 3,000 nodes. It's fast, it is cheap, and there are more than 14,000 business points, like merchants and business companies who are accepting Bitcoin all over the world. Even now, when the Bitcoin price is low, then the market is sort of pessimistic and so on. Even now, people are bullish on that, and already this has this sort of adoption. So, speaking about that, we shall see that in principle there is no other version of money which will be better than Bitcoin in terms of the fundamentals. So it's just only the question of time when people will realize that, like when it happened with fiat, when it happened with credit card, for example. Nobody wanted to use credit card at the beginning because people thought that credit cards are like not safe, and I will trust my money to the internet. No, it can be stolen and so on and so forth. But now you mostly use credit cards, right? And not mentioning the China China case when they use this electronic money, very similar in terms of the usage with the Lightning Network of Bitcoin. So the acceptability is just a matter of time, in my personal opinion, and it seemed reasonable to me. Then, if you would think of the Bitcoin as a store of value comparing to the other assets like gold or stocks or something, it has one great feature which again everybody know, but very few people I think appreciate to the reasonable extent, that is limited supply. And when you look at any kind of asset and you can think of, okay, shall I use it as investment for the long term, for the future, you will see that there is no other asset which has lower inflation than Bitcoin in the world right now. And this is its fundamentals. It can be changed, and it's very transparent. Everybody know like when it will change its inflation rate and so on, and finally it will become basically nearly zero inflation rate. So again, comparing to all the other assets, it's the most profitable because of this feature. It's unique because of this feature. And of course, some people will argue that, we will have forks, we will have other currencies and so on. But I like, for example, it's all of them are easily could be beaten by the counter arguments. Like I like the one from Murat Mahmudov about the forks. He was saying that if like a lot of Zimbabwe dollars will be printed, then will it dilute the price of United States dollars? Apparently not. The same thing with Bitcoin and Bitcoin forks. So, and continuing with that, we need to consider that if the Bitcoin will be eventually used as the global currency, the global store of value, and the means of payment, it should take at least certain portion of the overall world capital. So this is the old infographic, but I think it's still representative. It shows the amount of capital in different assets, which is like defined by the area of those little squares. So Bitcoin is here, it's $100 billion. Well, it's still different, but relatively similar. So here is a silver amount, money in silver. This is the cryptocurrency value. This is biggest companies. This is richest people, California GDP, Fed balance sheets, currency, gold, stock markets, global money supply, which we talked before, global debt, global real estate, which is quite of a bubble, I would say already, and derivatives. And I can scroll long time to reach the end, and here is our Bitcoin. So you can see that what is the room to growth for Bitcoin in this huge capital system. Apparently, if it will take just a very small portion of that, it will cost already a lot. And I wouldn't be surprised that again the Murat Mahmudov opinion about the price of Bitcoin of $10 million per Bitcoin eventually will be not crazy at all, appear to be not crazy at all. So, and the point is that, again, if we will look at the Bitcoin in a long term, then you would think that in general, because of this deflationary model, it should have more and more value, and the fact that as soon as it will be more adopted, this fixed basically fixed value of number of Bitcoin will be just increasing in price because it should serve for the operation of the current financial system and the future financial system. So that's why the price of Bitcoin should rise. I must say that looking at the price of Bitcoin in general in the long term, of course you will see those rise and highs and lows, and you think that it's like not that great store of value actually, if you have 80% drop. But again, if you have the long-term window of your investment, like 10 years, 20 years, if you again 10 years invest here, got here, you would still be in a profit. It's the best performing asset in the world right now. So you will not find anything better than that. And moreover, I wouldn't say that it's like go all in, go sell your kidney and buy Bitcoin. It's like in trading, if you want to go you have a trade, then you set your entry point, you set a stop loss, and you set a take profit. So it means that right now, and you have this trade if the risk reward ratio is reasonable enough to you, if the profit is much bigger than the risk you can take. So for the current state of buying Bitcoin, investing in Bitcoin, I think this trade is the most asymmetric trade you can ever think of. And like it could drop, again, those 51% attack, or somebody will buy all Bitcoin, or whatever can happen, but it's very unlikely to happen. And the important thing that the potential of the growth is much bigger. So that risk to reward ratio is amazingly pleasant. And again, the point is that like huge investors which are considering now to enter crypto, act like those. Don't invest everything. Invest 1%, invest 0.1% or 0.01%. Don't buy that new iPhone. Stick with your old one for a year or two, but just buy that 1-2 Bitcoins, and then it will be like your pension fund or apartment for your or house for your kids when they will grow up, or their education, or in case of somebody will get sick, it's like medical treatment costs and everything. So like that. And again, it's not a financial advice, guys. Just think on your own and go search for the information if you're not familiar with this topic. But don't believe anyone. Trust only yourself. But just use it as a starting point to consider those things, because this is the lifetime opportunity, in my personal opinion, and missing it will be very lead to the very bad feelings eventually when you will see the price of Bitcoin going to like $100,000, $1 million, or whatever, and you think, why I didn't buy it when it was like $5,000 or even $20,000. Okay, I would like to end my video with this sort of more philosophical thought is about capitalism. So I like this definition of capitalism from Oxford Dictionary, that capitalism is an economic and political system in which a country's trade and industry are controlled by private owners for profit rather than by the state, which means that basically right now we live in the system where nobody cares about no one but just the profit. So I don't say that like capitalism is bad or something, but consider that the fact that in this system we have to like expand, give loans to have more profit every year, and without expansion it will not be able to develop, it will not be sustainable. So that's why we have all those bubbles once in a while, in order to start to grow new bubbles. And it reminds me actually the picture of Bregel called Big Fish Eat Little Fish, when you have basically again small ones small bubbles should grow, and then they grow to the big one, and then they have to die because otherwise there is no food for them, and some real owners of this bubble will take profits. So as soon as we are in our capitalistic system, there is no way to be more like, say, this is the Bitcoin absolutely different feature from the current system. This deflationary model is going against all the inflation based principles of capitalism, and it seems like it's going against the flow. So there are two options. So either the people who are running the system will dump Bitcoin and will not let it to work and operate. But actually, it's really hard to fight Bitcoin because it's decentralized, it's supported by the global community, and so on and so forth. But like the second option is to let it grow and find the way to implement Bitcoin in the current system. Otherwise, Bitcoin could actually make the current existing system already useless. So yeah, that is the future. That's the point, guys. Anyway, that's just my personal opinion. Let me know in the comments what you think, and hope it was not that boring. Thank you for watching this long video. Hope to see you again, guys, tomorrow in the next update. Let's see if the price will be moving, and maybe some interesting in terms of technical analysis we'll have. Again, thank you. Safe trading, guys. Goodbye.